getting a 30% return in 1 year while being broadly diversified across more than 3,700 companies. Over a decade, your portfolio could generate an average return of 12% with a positive return of 68% of the time. Sounds great, right? In this video, we will uncover why this ETF could be a game changer for your portfolio, revealing some hidden benefits.
Oh man, I knew this was all too good to be true.
But remember, if it looks too good to be true, it likely has downsides too, right? So does it? If you had started your portfolio with VTI in 2050 with $10,000, by the end of 2023, you would have more than $26,000. And in 2023 alone, investors saw an incredible 27% return on investment, and the best year was 2019 with a 30% return. And this could be a game changer for your portfolio. But is this the ultimate ETF to supercharge your return, or is there even a harder pick out there? So let's uncover the investment secret you have been waiting for. Because the S&P 500 is one of the most famous index funds out there, but it's not the most diversified with only 500 companies. And in contrast, the Vanguard Total Stock Market ETF, the VTI, includes nearly 4,000 companies, though still all within the US. So it's diversified, but only within the US borders. And that's like saying you have a balanced diet because you eat both cheeseburgers and hot dogs, right? Picture this. What if a cyber attack cripples the US financial system overnight? Or a new pandemic causes worldwide panic and economic shutdowns? As an investor, you are left with a portfolio as fragile as a house of cards in a storm. Scary, isn't it? So let's be real here, because market panics are inevitable, right? But you need to be smart. Proper diversification is just about playing it safe. It's about being ready for whatever the market throws at you. So having the right diversification within your portfolio is crucial. Think of it as a financial equivalent of not putting all your eggs in one basket. Unless you are an omelette enthusiast, of course.
All right, eggs.
I'm Maurice and I've been in the financial industry for over 15 years. I've studied top performing investment portfolios managed by the most successful asset managers, gaining valuable insights. And as a result, I know exactly what to look for to achieve top performance in your portfolio, even if you prefer to manage it yourself without paying for an expensive wealth manager. Because let's face it, who wants to pay someone to do something what you can do yourself with a little bit of guidance, right? When we look into the Vanguard Total Stock Market ETF, the VTI, we uncover several advantages. So the top 10 holdings mirror those of the S&P 500 and the US stock market, featuring powerhouse companies like Microsoft, Apple, Nvidia, and Amazon, underscoring why adding this ETF could be a smart move. Broad market exposure. The VTI provides exposure to the entire US stock market, including large cap, mid cap, and small cap stocks, meaning you are diversified across thousands of US companies, reducing the risk associated with any single stock. Cost efficiency. The VTI has one of the lowest expense ratios in the industry, making it a cost-effective option for investors. No sales loads or commission fees when buying VTI is a significant plus. It's like getting a discount on something already on sale, and that's an awesome feeling, right?
It's not my fault. They were calling to me, I swear, and they were all on sale.
So, high liquidity. VTI is very easy to buy and sell due to its high trading volume. This ensures you can trade shares quickly without significant price changes, helping you get a fair price whenever you trade. Strong performances. Since its inception in 2001, the VTI has delivered an average annual return of 8.5%. Over the last 10 years, it has achieved remarkable returns of 12% per year, benefiting from the growth of the entire US economy due to its broad exposure. Dividend payouts. The VTI pays dividends, providing a regular income stream. These dividends can be reinvested automatically, allowing your investments to grow faster. So this sounds real good, right? But what about the disadvantages? Performance is closely tied to the US economy, making it vulnerable to economic cycles and interest rate changes. A lack of international exposure. The VTI includes only US stocks, which limits diversification if global markets perform better than the US. It's like only eating American food and missing out on the deliciousness of sushi, pasta, or tacos. Then we dive into sector-specific risks. VTI's holdings are weighted by market capitalization, leading to large exposures in certain sectors like technology or financials. Underweighting small caps. While VTI includes small cap stocks, their impact on overall performances is limited due to their smaller weighting. VTI's dividend yield might be lower compared to other investment options like high dividend ETFs or bonds, which might not satisfy income-focused investors. So, to mitigate these disadvantages, consider purchasing another ETF alongside the VTI for better diversification. So, what are the best ETFs to complement the VTI with? So, if you are eager to boost your wealth and make the best investment choices for faster growth, this video is a must watch, because I will reveal an outstanding ETF that's not only broadly diversified but also boosts impressive performances. Plus, I will share the secret strategy many wealthy investors use and how you can leverage it to your advantage. So if you found this video helpful, don't forget to subscribe and hit the notification bell. Remember, making smart investment choices today can lead to financial freedom tomorrow, or at least the ability to afford guacamole on your burrito without a second thought. See you in the next video.